joined by Philip Keevil from Compass Advisers. Thank you very much indeed for speaking to us. So, as we've been hearing, the big story this morning and over the course of the past week, a surge in M&A activity. Why now?
Well, obviously it's dominated by the potash deal because it's so big. But the reason for that bid coming now instead of last year is A, BHP has a lot of cash. B, it wants natural resources, and C, it's got access to bank lending. This is the first big syndicated loan since the Rio bid for Alcan, and they've got it fully financed. So the banks are really hungry for this kind of business, so watch this space.
Absolutely, and we're now seeing some interesting new bidders emerging in the battle for potash. We've got China, Sinochem, and Brazil's Vale both expressing an interest.
Yeah, no, I mean, the Brazilians, Vale, it would be a very big deal for them. They've just bought the Rio potash assets in Latin America. It's clearly something they're very interested in. They compete with BHP across the board. Whether they can do something this big, and certainly whether they can do something at north of $150 where the stock is trading right now is probably open to question. Sinochem is completely different. Clearly, if the Chinese government wants to get behind Sinochem, then they can blow BHP out of the water.
Right. So do you think BHP is ultimately going to be able to convince shareholders to sell their shares for $130
how will you convince shareholders to sell for $130 when it's trading at north of $150? I'm not quite sure. I think they may have made a mistake. I mean, far be it for me to criticize.
Well, they have to raise their offer then, I suppose.
They'll have to raise their offer.
Then do they risk overpaying?
But yes, exactly right. And their own shareholders, are not going to like that. And then you've got the whole issue in Australia with the possible mining tax and so on. And so I think BHP has limited room for manoeuvre. I think they're hopeful that these competing bids won't transpire, and they will get it for a very reasonable price.
Right, and we are seeing a number of deals specifically in the resource industry, right? BHP's hostile takeover bid for potash isn't the only one.
Yeah.
Why is this the case?
Well, in oil and gas too. I mean, one of the things, if you see what's going on in the Gulf of Mexico, and that you can't drill there anymore, so you have to look elsewhere. So suddenly things like Cairn Energy become extraordinarily attractive. Watch the other UK independents, because you need, if you're an energy company, it's tough to find the resources. They're deep, they're difficult to get at. The governments are difficult. The governments are taxing more. So there's a limited places where you could go look for it. So it's cheaper to acquire. Hence, more bids in oil and gas.
And Philip, raw material prices have risen, what, 35% since the depths of the financial crisis?
Yes, you're absolutely right. There's been a recovery across the board in commodities.
And that's playing a role in the rise. And it's playing a role,
yeah, exactly right. So you can make more money out of it. And if the stocks prices have been lagging the underlying commodity, it makes the stocks cheap.
So how have market conditions changed the way we do M&A, or indeed the M&A market itself?
Well, we've had a long period, of low activity for more than 2 years. One of the things you realize is that the CEOs basically have a lifespan of 3 to 5 years. And, that's the first thing. Second thing is they've cut costs to the bone. Where is the margin improvement going to come from? Because they can't get top-line growth in this kind of market. So the only way it comes from is M&A synergies, which is adding similar products which you can put through the same pipeline.
And another striking feature of all this deal activity has been that these companies seem to have a lot of cash sitting on their balance sheets. Worldwide, $3 trillion, that's excluding the financial services industries.
Yes, you're absolutely right. They've built up cash, I think probably because they were worried about the economy and didn't know where it was going, and therefore,
And now they're not afraid to spend.
But now they're less afraid to spend it. Although some of them, will be buying back stock. Some of them will keep it for a rainy day, because in certain industries, there's still a lot of uncertainty in the market. So you do want to spend all that cash all at once. So,
Philip Keevil, Senior Partner at Compass Advisers, thank you so much for coming to speak to us. Appreciate your time.
Great pleasure. Thank you.